Hey, what's going on, everybody? This is SOCS here, coming up with a new video. Like I said, as always, it's not financial advice, not financial advice at all. You're talking to a straight retard. So, like I said, please don't take me as financial advice. Please don't put all the money in what I tell you to do. Do your own research. So today it's been a minute since I uploaded a video. Last was April. I think I uploaded one about RDBX during the run-up. If you guys were there with me, I think we bagged 70K off RDBX, and I'm not sure how much we bagged off April. No, April was out. But either way, I haven't been trading that often. I've been busy. But I have been watching here and there. The markets be getting hit hard, just like everybody else, and I'm almost at the point of quitting. I really am. Um, yeah, but at the point of almost quitting right now. We were up 20, 30K so far and lost it all. But it is what it is, you just got to be right once. That's all I got to say. But either way, let me get to the video right now. So I want to talk to you about the three stocks that I'm looking at that I feel are very interesting, has potentials to rip or make some money off. Um, First one is Yellow. I'm not sure if you guys heard about it. It's a bankruptcy play. Short interest is 67%. Or what's that? Yeah, right here. So short interest is right here. 70%. I think today they actually covered a bit. So it is about 67%. Cost of borrow is stupid high. There's barely any shares available. Now this play is a very risky, and like I said, I'm not talking to you guys about like NVIDIA, AMD, Apple, any of those plays, right? I'm here for short interest, high squeeze play, high risk, high reward type plays. Scare money never makes money. Okay, so let's talk about Yellow. Bankruptcy play, filed bankruptcy on Sunday. Stock went from I think it was 40 cents. And this is where the people that ate, these are the guys right here that got in at this part right here. Contracts, let me tell you something, guys. These contracts, and it happens, don't overstress yourself about it, but I won't forget this contract right here. It was worth like $3. Um, I think at the peak was at $400. So you could have made a serious amount of money, close to like, I think almost like 10,000% return on your investments. But it happens, right? So either way, let me get straight to the point. Why I'm watching Yellow, bankruptcy play, high short interest, CTB's about 300%. Looks juicy. The only risk is the risk of delisting, right? So since they're in the bankruptcy play, everybody's trying to eat whatever they can from the company. It popped in the morning after rumors of they have over, I think, $2 billion in assets, which is weird because I think their average yearly revenue was 25 million. It's really low, long story short. Now, the reason I like this play is because of the potential the White House might step in. Yellow is the third largest trucking company with over 100 years in operations. 30,000 employees, all unionized. I don't think the Biden administration wants to see all those people unemployed. So we might have the U.S. government step in. I'm not 100% sure. It might not happen. Like I said, this is all a hope you play, high risk, high reward type play. We could squeeze the shorts. I don't know. The risk is, like I said, NASDAQ delisting the stock. Um, yeah, that's a big risk we got right now. I'm also watching this right here. August 18th OPEX, which is next week. The option chain looks jacked. The max pin is at $2.50. Right now we're at $3. So anything above 250, let's say 350, guys, this thing is gonna go straight to the moon. Shorts will be screwed real bad, but that's Yellow for you right there. I've been watching the flow. You got not that big of doesn't look like that much of a reels are coming in, dropping serious money, 25K, 24K, isn't it's not that big. It looks like these guys got in 23,000, but this was very interesting. I don't know. I don't know. It's let's just see what happens next week, right? Um, so that's the info. The next play I'm watching is RAD. A lot of pumps are happening right now on Reddit. I don't like it. Reason being, short interest is the IV is way too high. It's a pharmaceutical play. Pharmaceutical plays, you got to be very careful. I actually like to make money off pharma plays on the way down. So usually I watch whenever an FDA approval comes out, these stocks rip, and when they rip, when they crash, oh, they crash real bad. I give you an example. FTG. I've been showing this one. It came out yesterday with some FDA approval. Stock went from $1 to $24,000. Now, look, if you got in, okay, $3,000, you probably easily close. So these contracts were $5. 5,000 contracts, $5,000, you would have had $1.7 million, right? But the thing is, they're hard to catch these FDA plays, right? But the ways you can make money off them is showing them all the way down. As always, they start crashing. It's down $5 today, down another 17 cents in the after hours. Great way to make money off pharma plays. They usually dilute shares right after they get FDA approval to make more money to recoup from all the money they make on researchers. So that's one way I play pharma plays. So regarding RAD, I'm not sure. A lot of OG memesters are in it. They're saying it's gonna rip. I think the IV is just way too high for it. August 18th is OPEX week, right? So you could probably get in and make some money off it on August 18th. Like I said, high risk, high reward. Too risky for me. I'm not going to be in it. I'm going to be watching. Another play I'm watching is IEP, ICANN Enterprise, notorious corporate raider. Right now, he's been getting shorted out of by I'm not sure what's that company's name. It was a short. It's a company. It's a hedge fund that shorts companies. And I think they hit two big companies last year, the last 2 years. So these guys are coming after Carl Icahn, and they're pretty much saying he's robbing Peter to pay Paul with his high dividends um, for his stock. Pretty much, I didn't read exactly the thesis, but they're pretty much saying like what he's doing is running a Ponzi scheme or some sort of scam. And when the thesis came out, it went all the way down to $18, but it did a beautiful recovery back up to $30. Contracts went up as well, right? And then all of a sudden he kind of messed up and he said, where's IP? He said, we're going to cut the dividend. So the short thesis was right. So they cut it and it went down from $33 to $20. Um, how I'm going to play this is I don't think this is going to go bankrupt. I don't think this stock is going to crash, go back down to $10. What I might do is I might play it as like December, September calls close to the money. So like these $20 contracts. I might scoop up some of these. They're probably selling for like $100 right before they dipped, or before they crashed from $30 to 20. I think right now we're at what price we are at? $23. The contracts were $299 a piece, right? Right now they're $10. You can make some decent bag off that. So that's something I'm watching right now with IEP. The last thing we got right now is UPST, financial lending service. They had earnings today, missed it bad, down 19% the after hours. I think it was at one point down 20%. I'm not surprised. The stock is way overvalued. But it's a short squeeze stock, right? We don't care about fundamentals, we care about technical and squeezing shorts. So unfortunately, yeah, they kind of I already knew they were going to miss earnings. The stock was way too high. Like if you look at it right here, the revenue was 117 million, right? I think they were at 135 million this time. So I already knew it was just the price didn't make sense, a 7x price, right? So I already knew they're gonna miss it, right? Now shorts are gonna probably pile in, which is great. I mean, if we could squeeze these shorts again. But the question is, when is the time? August 18th was OPEX. Max Payne, I think, was $45. Since we're now at $41, pretty much shorts are in complete control. So if you look at the puts right now, everybody here is going to be in the money. Look at all these guys winning right here, all the way down to $15. This might go down. I'm not touching it. Maybe if it hits $30, I might get in. And I'm looking for those cheap calls, right? I'm trying to get some calls that expire maybe in January. And this is the interesting part. Compare this play to CVNA. CVNA, which is I find interesting. Insiders sold right before the crash. So right here at $52, they sold it, started ripping, going downwards, right? So even right here at $57, insiders sold, right? So I'm going to be watching insiders if they ever buy back into Carvana. Carvana and UPST move the same, so I wouldn't be surprised Carvana comes back to the $24 mark or the $30 mark. Yeah, these are pretty much the four plays I'm watching: yellow, red, UPST, and IEP. Like I said, not financial advice. Let me know your thoughts if you guys know any other play that might squeeze or might look juicy. But yeah, right now it's been a bloodbath in the market. A lot of people losing money. I'm almost at the point of quitting. Um, You gotta know your limits in this market. I think it's gonna be a better year next year when interest rates start going up, stop going up and down, all this type of stuff. So, and hopefully the Russian war is over by then. But until then, we're in the kangaroo market. If you are lucky to make a bag, I would say take that and run. Don't try to get back in this market. It is a bloodbath out here. Either way, guys, peace out. It was nice talking to y'all. I might upload some new videos if I see any new plays out there. But if you have anything, hit me up in the comment section and yeah, we'll talk more. Peace.